Good afternoon, everyone. How are you? This is Nate G. Can I get a quick mic check? Anyone out there? Check, check. What's going on, everyone? Things good? Market's slowly creeping its way up here. Gotta love that. I wanted to jump on. I've been promising that I would do an IronButterfly session. So here I am. I'm going to do an IronButterfly session. And kind of talk about what I've been playing with and how to trade these. And I've been playing with different times of day for the IronButterfly. And these are, what I'm going to talk about are 0 DTE. That means they expire today. 0 DTE IronButterfly on the SPX, right? Because that's cash settled, right? So an IronButterfly is essentially, if you've ever seen a butterfly type risk reward, it is a high reward generally to fairly low risk, right? The profile ends up kind of looking like that, where this is your sort of your max loss area, and then generally there's a profit line here, and anywhere along this, if you pin it at exactly the value that you have sold your contracts for, you get max value. Let's just say this is 1400, and if you're in anywhere outside of these wings here, your loss is I'm just picking some nice round numbers. Let's say it'd be minus 400. And then anywhere along this is sort of this quickly deteriorating value, either direction, but everything above this yellow line is a green trade, and everything below is a red trade, but it's capped at let's say minus 400. And so if you can get it inside of this window, it's a profitable trade, and if you actually are able to pin, it's an extremely profitable trade. And the chances of actually pinning are pretty slim, but there are some good profits to have along the way, and you can also take that profit early if you so desire. And so what I've been experimenting with is putting on an IronButterfly early in the day. And what an IronButterfly consists of is you're basically selling, you're basically doing you're selling a call, right? So let's say we were going to put one on right now at the money. So you're selling a call for, let's say, 58.45, right? You're selling a put for that same strike, right? And then you're selling the wings out, or you're buying the wings out here. So this is sold and sold, right? Those are the higher values. And then you're buying a call up here, and then you're buying a put down here. Okay. And what that's creating is a lot of value here at your strike price, and then the wings act as protection. Okay. So you don't always have to buy this right here at the money, or you don't have to sell it. I'm sorry, it's a sell. You don't have to sell it here right at the money. You can predict that we're going to go the other direction. We can go up, you can go down from where we are. And it has to expire by end of day within sort of that range. Okay. And so the ones that I've been selling at, I usually sell them about 20 wide. I've been selling some, at like 10 o'clock in the morning, right? And you go 20 wide, and you've got sort of all day to see if that comes back to that center. And those are about a 45%, 40% win rate on those, but your wins are much higher than your losses. But what I've found is coming in here, and I'm jumping on actually right now, so hold on just a minute. Let's do an 840. I was going to do an 855. The other issue with this is as the implied volatility goes up, like with the election coming up, these become less and less of a good risk reward play. You're sometimes getting into a 1-to-1 type of situation, which isn't the best. But I have found that about 230 to 240, putting on an at the money IronButterfly. Now, if you do it exactly at the money right now, you're not going to get a good risk reward. Okay, so we can predict that either the market's going to go up, and we'd want to pin at, let's say, 850 or even 855, or we think the market might pull back a little bit to 840 or even 835. And then we're going to get some better risk reward for our money. But the one I was looking at before I came on was the 855. So let's say we think the market is going to rise into the close. And so we're going to put on the 855 IronButterfly. Let me line this up here real quick so I can kind of visually show you what that might look like. Okay. So there's your 855. You're buying it for 20 wide. Let's get that just a hair lower. Or you're selling it for 20 wide, right? And you're hoping to catch the theta decay in the end of the day. And what happens is we get sort of a pattern or a risk profile that looks a little like this. And then we have, about $12 here on either side that, starts to take us down into negative territory, right? So as long as the market closes today within the window of about 58.67 to 58.42, this IronCondor would be a profitable win. If it closes outside of that, and if I go to my if I go to the one that I had pulled up prior, this would be, and it's not going to be the same because I'm talking for a while and these probabilities shift. Okay, so you have to do these for yourself and make sure you're getting the right strike prices and midpoints. But when I pulled this up, this one, if it pinned, would win $1,048. Okay, and well, it's a terrible 8, and its max loss, anything outside of here, would be a 452, minus 452 on either side, right? Let's go 452. So in this case, on one contract, I'm risking 452 to make potentially somewhere near $1,000, assuming we can maybe get a pen at 855. Right? And so I'm hoping if you kind of understand the way options work in terms of theta decay, throughout the course of the day, let me move this up here real quick. Throughout the course of the day, if this is your day, right, the theta decay happens slowly in the first half of the day, and then ramps off real sharply in like the last hour and a half of the day. And so putting these on at about 2:30 to 2:45, if the market is just going sideways or drifting in a certain direction, you can start to capture this quick theta decay right here. I know that's a terrible drawing, right? We want these to expire quickly, and we're going to get a quicker ramp towards the end of the day. Okay, so for this particular example, right, we would be buying, or I would be buying, not we. Let me just get rid of that real quick. So if I thought that the market was going to close somewhere near 58.55 today, right, this would all be as one transaction, right? I would be selling the 58.55 calls and buying the 58.75 calls, and at the same time I would be selling the 58.55 puts, right? And I would be buying the 58.35 puts. Okay. So I'm selling the same strike here, calls and puts, and I'm buying the calls and puts on either side. Okay, and that's what creates the IronButterfly. And the IronButterfly is a play that you want to expire within this range. Now, you don't have to play these 0 DTE. You can play these weeklies. You can play them as monthlies. You can play them as whatever you want. But you're still playing within that window. Now, on my back testing, the one thing that I have noticed is that this is going to give me a credit, or it was when I had it pulled up a minute ago, of what did I say? 1,004, let's say 45. Let's just say that's what it was when I had it pulled up. So it gives me a credit of 1,045. Okay, and if the market closes at exactly 58.55, then I'm going to get a full $1,000. 1,045. Now, it's not necessarily going to do that. Let's say it closes at 58.52. There's a curve on here. Let's say that would be $820 or whatever the case might be, and it ramps down pretty quickly here. And so I've found that if you set a stop at 40%, minus 40% of that credit, and a profit target of plus 80%, and you manage it that way, you're getting almost a 60% win rate. And I'm typically doing them at the money at about 230, 240, instead of playing it up into a higher or a lower value. But the risk reward changes when the IV gets higher into something like the election or anything like that. If you've noticed, a lot of options are a little bit more expensive as we get into these ramping up into next week. Okay. SPX is cash settled. You can also do the XSP, which is significantly less, which is also a cash settle. But if we're managing these well, right, then you can let it expire if it's looking like it's going to be very close to your pin. But in some of the testing I've done, taking them off at either 40 or 80 has been working pretty well. Keeps you pretty consistent. Then your wins are two times what your losses would be, essentially. Does anybody have any questions on that? So basically now once this trade is on and you've got your risk defined, you just let the trade play out. These are 0 DTEs. These are today's options, which is why this graph is so small. I'm playing into the close today, and then I'm carrying no overnight risk. Yeah. XPX is Schwab. If you're using Thinkorswim, I think SPXW if you're using the main platform. I did record this, Onyx, yes. And there are a lot of back testing pieces of software and sort of auto traders that will help you put these on. Like if you're using Thinkorswim, the IronButterfly is not a valid option. You have to do an IronCondor and then change the strikes that you're selling and then the strikes that you're buying, and it turns it into an IronButterfly. There is no IronButterfly choice in Thinkorswim. Joyce, how do I choose the strikes to sell? Basically, that's where I think that the pin is going to happen. So the strikes to sell in this example here would be 58.55. Now, the thing I've been testing is at the money. So at let's say 2:30 p.m., they'd be at the money strikes, which in this case, let's find exactly 2:30. There it is. 2:30 would have been, let's go to the high side. Would have been like the 245. That's 58.45 strike, sorry. But because IV is so high right now, the 58, the at the monies are actually a little less than a 1-to-1. So your risk is higher than your reward. Now, as IV comes down, that shifts, and you can usually find things for, at least 1-to-2 and sometimes 1-to-3. So for this example, we'll just mark up our charts and watch how this one plays out through the course of the day. But that's the IronButterfly play, and it's helping to take advantage of a lack of movement. If you were trying to play like yesterday, this is yesterday's chart. My IronCondors, I had 2 different IronCondors yesterday, worked great because the market went absolutely nowhere. Right? When we get into a trending market, they don't work as well. But if you were trying to play snipers yesterday on the SPX, there was just not enough movement to really get anything to happen. And so after about 10 o'clock, 10:30, I just stopped playing them because we were just going sideways, and moved into looking for more credit spread plays and IronButterfly plays to capture the premium on a sideways market, right? So a play like this is capturing the premium in a market that's going sideways, okay? And so in this case, we're kind of drifting up today. You could play this any way you wanted, right? A higher probability play is at about 2:30 is an at the money play, but with IV where it is, you're not getting a great risk reward. Okay, I will post this up to YouTube once I'm done here, but I just wanted to do the presentation in here so everybody that was available could ask questions, and then you can watch it again later. Yeah, an IronCondor is just a different play. You're not going to get that risk reward play, but basically on an IronCondor, you're saying, you know, you're buying a credit spread. You know, let's say you're buying a $5 wide credit spread, call credit spread up here, and a $5 wide put credit spread down here, and then you're saying, okay, so these two boxes, let's say we were trying to play an IronCondor. Let's say we were playing it more at the money. This is also a very effective play, but not the one I wanted to show right now. Is you could do, you know, a 20 wide IronCondor, and then the nice thing about these is if this finishes anywhere in between the two plays, you get your full value. But the only small caveat to that, it's a much more conservative play, is anything that fits in between those two, you know, let's say you're going to win $200. But if all of a sudden we take off and go above that or below that, your loss could be, you know, $800. So there's just a little bit more management that you would have to do in an IronCondor. IronCondors I have also been playing with, and they've been pretty effective, about a 60% win rate. But if you don't manage, that 60% win rate can still evaporate profits if your risk to reward is 3 to 1. Right? So there's a number of different ways in which to capture theta on a 0 DTE. I've also been doing 1030 credit spreads, where if we're above our opening price, I'm selling a call credit spread at 1030. And then if we're below our opening price, I'm selling a put credit spread at 1030. Those have also been working pretty well. Today's is not, at least for right now, right? Because I sold a call credit spread at 1030 into this spike. It was 1028, so it was a little early. And now we've drifted up into that, but the day's not over. It could roll over and clear. You know, and that's a trade where anything below that level, different than an IronCondor, all it has to do is close below the strike that you sold for that to be profitable. And it's just taking advantage of selling premium and letting theta work in your favor. Yeah, it's hard to set OCO ranges to take profits or cut trades on things like iron butterflies. There are pieces of software that you can use that will, you know, scan and do that automatically for you, and then you know, or you can just manage them throughout the day yourself. So I'm going to jump off so Nate can jump back on into the close, but I just wanted to come on and talk about those, and because I'm going to start putting those into the chat, and I just wanted everyone to understand what it was I was doing. When I do that, I'll put the strikes that I'm selling and the strikes that I'm buying, but I just wanted to explain how those work and what they mean when I put them in. Okay, talk to you all later.